Okay, just a quick afternoon update here because we've kind of been waiting for this for a long time. If we look at the S&P 500 here, we have had a push, that bearish candle we've been looking at. Okay, so those of you who have been seeing me put in this little red cigar-shaped object every day, that's kind of what it was meant to emulate here. And we've seen this being put in on the S&P 500. We've moved from 4,100 down to 4,000, and if you can kind of see what I'm looking at, you know, it's indicative of like this kind of action here. Okay, and so what that means, if you see, you know, compared to all of this movement from December, okay, we have October, and then we have some pushback through December, and then another continuation to the upside. This is indicative of bearish action. So we're definitely going to be selling over the next, few weeks, couple of weeks, 2 weeks, 3 weeks. Dow Jones Index, has moved out of this flag pattern we've been looking at, and is pushing down towards 3,300. Okay, so this kind of action here would spell a break of structure, and that's kind of what I'm looking at. So that's just an afternoon update. I rarely do these, but it is important to note that we are moving back into bearish territory. Again, my outlook for US economy this year is that we, haven't seen anything yet, and we are definitely going to continue this bearish push, probably back down, even down to 3,000. Okay, but we shall see. But for now, just be wary of buying, because any selling kind of occurs quicker than buying as well. Any buying, you could be left behind. So if you bought up here today, the likelihood of this coming back up here is less than. And if we look in the minute time frame, again, just to answer someone's question earlier, and I actually did this beforehand because I was like, okay, let's look at the difference in, if we were to trade mean reversion or then go into these like shorts or longs if it's a very bearish or bullish day. And we can see you've got your stop loss like this. The chance of it shooting back up across there is just higher than not. And the chance of it doing this is like 10%. So even if you take... So just to clarify, like I put this trade in before and my take profit was down here where there's a demand zone, and it didn't even reach that. Okay, so if you were to leave that all day, it might just come shy of that, stop here and then come back up. You don't know when it's going to end. And so for now, especially if you start it, just anybody in this group, just avoid these days. The best thing to do is just stay no. This kind of downtrending move is what happens 10-15% of the time, and we can just avoid it, and just watch what happens. It's nice to see, just transform our mental FOMO into like, wow, that's a lot of profit too. That's dangerous, and it's not what I want to trade. Okay, just avoid anything that has such a trajectory to the downside like this. We can see on MetaTrader when you use our ROC, there's no mean reversion happening here. It's just a very strong downtrend. And so I haven't touched anything today. The fall during the London session was indicative of continued downward behavior for the rest of the session, and that's what we've seen. So yeah, just to recap, it is a change of direction on the higher time frame of the S&P 500, and I dare say we're going to have bearish action for the next couple of weeks, 2 weeks, 3 weeks, possibly the next 2 months. Let's see what happens. Have a great afternoon. Cheers.